Let's get to our trader rundown today with Dan Deming of KKM Financial. Dan, good to see you on the show today.
Hey, thanks for having me, Angie.
So let's get some trader talk from you. We have a jobs number that was not great.
Well, yeah, we don't know really what the fallout from that jobs number will be because it was a unique situation. But one thing in there, Angie, that the market did pay attention to was the wage inflation number, and that was much stronger than what the market had anticipated. You saw quite a reaction in the bond market again, so that's something that if that continues, then that's going to push the Fed probably to move sooner rather than later when it comes to interest rates.
The VIX had a big reaction last week. Are you still having some thoughts that maybe that could be saying something about the overall market?
Yeah, there's only 9 points to go before it goes to zero, so yeah. But it hit a record low last week, and certainly when you look at the market though as a whole, the market just has this ability to continue to grind higher, and even if we see any weakness, the market has shown the ability to fend that off very quickly, and that's part of the reason why you continue to see volatility expectations compressed. When you look at how the market's moved over the last 30 days, actually it's only moved about 5% on average over the last 30 days. So a volatility measure of 9 is actually overshooting what the market has realized over the last 30 days. So you can see that we're seeing a very low vol regime right now because the market is continuing to just grind higher.
Something that I've been paying attention to, and I know investors have as well, as when we get pro-growth talk out of Washington, it really props up the stock market.
It has, and that and the potential tax reform. Both of those topics have helped us build a foundation in this market. And we'll see now, we're going to kick off earnings season this week with the banks, and then we're going to roll in full steam in the weeks ahead. So, you know, the market will be paying attention to basically what the expectations are from a corporate standpoint when you talk about the pro-growth and the potential tax ramifications.
What's your trader instinct on earnings season, and especially with the big banks reporting in this week?
Well, the banks have had a nice tailwind because, again, the expectations have shifted over the last couple of weeks that interest rates are going to go higher sooner rather than later, and that has benefited the banks. So we're seeing quite a reaction there. Overall, though, the comps from last year are going to be a little bit more challenging than they were, so I think every quarter that rolls out now, you're going to get higher comps, so that's going to be a little challenging. But overall, it does appear that the growth expectations, not only in the United States, but globally, have picked up, and I think that will serve as a nice backstop for the market.
Well, thanks so much for your trader talk today. Have a good trading day, Dan.
Thanks for having me, Angie.